AMC stock having a very strong green day today, currently up about 8.5% on the day. By the time you guys see this video, obviously these numbers could be different, but we have a lot to talk about in a very short amount of time when it pertains to AMC, when it pertains to the overall markets. We just got some news out of Apple specifically that could curtail a glimpse into what to expect for earnings next week as well as earnings for this week. So we have a lot to talk about in a very short amount of time. Hit that like button and subscribe to the channel, well, because it is free 99 and it helps out the community, potentially helps out your portfolios, see more green in them as we can get more people a part of this community and familiar with the potential of AMC stock. As always, this is not financial recommendation. Do not take any of this as a recommendation. You could lose all of your money if you listen to people online without doing your due diligence, no matter who they are, no matter what it is about. So that is paramount of importance. Now, getting straight into this video, AMC stock rallying a little bit more as we are doing this intro, up almost 9%. Let's go ahead and take a look at the Ortex data. First things first, let's take a look at the cost to borrow rate. So the cost to borrow still at 11%, cost to borrow average at 10.74%, cost to borrow minimum at 9.97%. The estimated short interest of free float is 17.93%, free float out on loan 25.3%, shares out on loan 130.41 million, days to cover 3.19, cost to borrow 10.99%, and 100% share utilization. If we take a look at the option activity, 36 orders totaling $3.39 million, positive order value of 70%. The video that we put out earlier, the positive order value was a little bit less than 50%. It was about 45%, and you are seeing a lot more call options actually coming through. Some of these orders are on the bigger side. Look at this one. January 20th, 2023, $30 call for $1.06 million. To see a single order over $1 million, a call or a put is a big deal, right? But why is this an even bigger deal? Let me just tell you guys, hedge funds, they have money, right? So what's a higher quality trade? Buying something that is close to the money. Say right now AMC stock is at $16.71 per share. What's a better trade? By the end of the year, betting that AMC goes to 20 or betting that AMC goes to 30. The only difference is how much you are paying for the contracts, what your actual break even is. So hedge funds that have a lot of money tend to buy options that are closer to the money because they are not as risky and you don't have to be that right? If you're buying a $30 call, you got to go way out the money. You're looking at a double up from here with AMC stock. Well, look at that. January 20th, 2023, $30 call for over $1 million. These hedge funds have money. Why are they going so far out the money? Well, because they think AMC will go on a parabolic rally. And there is literally only like 5 months left of 2022. So that is a very big bet that AMC stock is going to at least double, even factoring in the break even. That is an over 100% move from here. Break even being $32.31 per share, an over 100% move from here to break even. I think it's pretty clear when you're seeing that kind of activity on a day where AMC stock is up well over 8% for pretty much all of the day, that you're probably going to see some substantial upside from here. Now, that's not it. If we look at AMC on a technical basis, if you guys have not watched the last video, this is important, right? Look at what happened back in March. What happened? Well, you broke out above the resistance level, which was this 50-day moving average, broke out above that. You came up, tested the psychological resistance level at $20 per share, whereas the 100-day moving average was up here, $24, $25 per share. You come up, you retest this 1, 2, 3 times, and you could not break out above that psychological resistance level. But what? You didn't fall under the support level. You didn't even come close to the support level, right? And then you finally broke out in a big way, broke out above that moving average, 45% gainer back here. That was on March 28th. And then the next day after, you actually rallied about 5% to start off the day. You guys probably remember that. We got halted about 5 minutes into trading. Stock dropped, and it was pretty much downhill ever since then, right? but keep this in your state of mind. What happened right here? Okay, so what happens over the last couple of trading days? We came up, tried to break out above the psychological resistance level at $15 per share. 1, 2, 3 days. And then on that fourth day, you literally gapped up, broke out above the 100-day moving average for a period of time, and then you came back down. But you did not come under the previous level of resistance, which was $15 per share. The next day, the next day, the next day after that, you tried to break out above. You even went above, the 100-day moving average at times during these days, and you went under the $15 psychological resistance level times, certain times throughout these days, but you did not close under that $15 level. You really stayed in this range, and then what happened? We gapped up above the 100-day moving average. You literally started the day at the 100-day moving average at $15.59 per share. The low of the day today was $15.53 per share, right under that 100-day moving average. And then, well, what happened? You seen a clean break. We actually hit $16.96 for the high. That's about 40 cents off from where we are currently at. So that might even happen by the end of the day. Yeah, let the next half hour or so hash out in the markets. But this is a solid sign. Why? Because like we just said, when you break out above a previous resistance level, which in this case, we're talking about the 100-day moving average, this blue line right here. Well, worst case scenario, you're probably going to find a lot of support at that level if you do see more market downside. And I think that's the most important thing to point out. And given some of the option activity that we are seeing, I think it looks very, very good. Now, the RSI is chilling out a little bit today. That is actually a good thing since we are at 65.84. That's getting close to 70. That's getting close to the overbought side. So that is a good thing. We're seeing it relax just a little bit, and the stock is up now just about 7%. If we do look at the volume is about 42 million at the time of recording this video, which is a decent volume day, but it's not anything crazy that we're not used to. Right? Once we get 100, 200 million shares that trade hands again, that's when I can expect to see a 50, 100% potential rally in the price of the stock. Now, the MACD is bullish, but we're not really going up that big on the MACD. We're not really seeing that huge divergence, so I think that's very interesting. I'm going to have to look into potentially why that is, because you would think after seeing this, rally that we've been on, the MACD would be a little bit more on the bullish side, but that does kind of just go to show we could rally even more before that would become, something people would look at and be like, hey, the MACD, MACD, RSI, they're overbought, short the stock. We're not there yet, right? So that is that, and that's pretty much it for AMC as of right now. Now, Apple. This is actually something that is very interesting. As you guys know, Apple is now only the second largest company in the world. Saudi Arabia's oil company, Aramco or whatever it is, they are the largest company, but still Apple is the largest American company that is listed on the US stock market, so they move the markets. And what is happening as of right now? Well, Apple is down about 1.7% based off of this news. Apple is slowing hiring. It says Apple plans to slow hiring and spending for some teams in 2023. This is a sign of the consumer slowing down, that potentially numbers for Apple are not going to be that great. So we have this as a forefront to look at, right? So we have something negative saying, hey, if Apple's slowing down spending, that's not good. That's in line with Facebook, Tesla, Netflix, all these guys. So we know what to expect, and it's just now hitting CNBC, probably going to get some more downside pressure here. But what happens if tomorrow Netflix misses earnings? What happens if IBM misses earnings today and after hours? Well, that's not going to be good for Apple. And then ultimately, the week of July 29th, that's going to be the important week. If companies really miss earnings that week, and you get the Fed raising rates July 27th, and then you get the advanced estimates for Q2 GDP the 28th, and that whole week you have bad earnings, well, that could mark some serious downside in the markets. But let's look at the probability of a 1% rate hike. Still at 31.5%. We are going to get this solidified, and I cannot stress this enough, tomorrow. Fed Brainerd at 2:35 p.m. I believe is the last speaker, and definitely the last speaker of this week. And we should have that blackout period for next week, since the meeting pretty much, starts next week. We get the Fed rate hike decision the 27th. I believe that is a Wednesday. So we're not going to get any speakers next week. And we only have the one tomorrow. And this could flip either to, yeah, we're getting a 1% rate hike, or there's no way we're getting a 1% rate hike by tomorrow. By the time Fed, what's this, Brainerd? Yeah, Fed Brainerd comes out and speaks. So depending on what she says, that is going to potentially dictate, or will dictate, in my personal opinion, if we get that 1% rate hike or not. If she comes out and, gives us the same hawkish verbiage that they're not even close to done raising rates, things like that, well, that's not going to be good. I will say, no matter what happens, and I said this in the last video, but I'll say it again, no matter what happens, no matter what rate hike we get, if the Fed comes out and says or indicates that they are going to slow down or stop raising rates, the markets will rally. The markets will rip, and you want to be fully invested in the markets. If the Fed does not indicate or say that they're going to slow down raising rates, if it's quite the opposite and they indicate that, yeah, they still have a lot of work to do because inflation was just 9.1%, that's not going to be good. And that will mark more downside for the stock market. So keep that in mind. Now, as far as other things you guys probably want to know, well, right here. The 2 and 10-year yield curve is still inverted about 20 basis points, which is the worst inversion since the year 2000. So you have to go back 20 years ago to get a yield curve that was more inverted than what we are now. So we are indeed going into a recession. And even the stock market today, it's kind of wild. We have completely done a 180. The S&P 500 was up over 1% at the highs today. And now look at us. We're down 0.14%. So some of those Apple puts starting to come back to life. Some of those Tesla puts starting to come back to life. So it's very exciting. If you guys want to come trade with me live in real time, link down below in the pinned comment. And that is how you guys can do that, or in the description of this video. Pinned comment, description. Either one will get you to that community. Now, the latest estimate for Q2 GDP, again, will be coming out July 28th, is a negative 1.5% print. So we'll have to wait and see what happens with that. But as of right now, it looks like we are in a Wall Street technical recession. Now, the last thing we need to talk about here in this video is the dollar. The dollar, when this chart goes up, is bad for companies. Bad for companies that do business overseas. Because, hey, if $1 used to equal 500 wons, well, now if 1,000 wons equal $1, if you're doing business, over in countries that use the won and have to move that currency back to US dollars, well, you need a lot more of those wons. You need a lot more spending in wons to equal that $1. So long story short, it is bad for exports, right? Exports, bringing that money back to America. And that's what Microsoft, Google, Apple, all these guys have to do. If they make money overseas, you got to convert it back into US dollars. So believe it or not, during times of less uncertainty in the world, like during 2021, where, business was great, people were spending money, the government's giving out free money, well, the dollar is weak. And that bodes well, because that means other currencies are stronger. The dollar, it weakens and strengthens based off of what other currencies do. So if the dollar is strengthening, other currencies are weakening. You can get very deep into currencies, and I actually like to, because I'm a little bit of a nerd. But long story short, we've seen the dollar go up like crazy past the COVID highs. This is a level of fear, really the best fear gauge you can use to measure fear globally. And we're definitely, higher than COVID level fears around the world. And it should correlate to an extent. When the dollar goes up, stocks should go down. We have not been seeing that. But what has actually helped us be bullish for, a majority of the day today, I mean, a lot of stocks are still up, but even the indexes, is because we're getting a move down in the dollar. If the dollar were to fall, aggressively, well, that would be a very bullish thing for the stock market. So that's something I want to point out. We're definitely not seeing that correlation as of now. Stock market is, completely flipped, and the dollar is still down. It's not really coming up too much like we have been seeing. So there you have all that. If you guys don't know what is happening for earnings with this week, here in after hours, you do have IBM. Tomorrow you have Johnson & Johnson in the morning. After hours tomorrow, Netflix, JB Hunt. Pretty much it. Wednesday, you have Tesla. Thursday, you have Snapchat, American Airlines, Capital, Mattel, Domino's, AT&T. On Friday, you have Verizon, Cliffs, American Express, Twitter, Next Era Energy. Those are some of the ones that I am personally paying attention to, and I'm pretty excited for Snapchat and Netflix earnings. Don't really know what to expect from Tesla. We already know their deliveries were not so great. So, depending on how earnings go, IBM and after hours, Johnson & Johnson in the morning, that could dictate how we trade for tomorrow until we get Netflix earnings, and that is going to single-handedly, that earnings report and that call is going to send a lot of people scrambling in the markets and cause a lot of fear, or it's going to be like, hey, maybe we're okay for this earnings season. I personally think you might see more fear rather than greed. So thank you guys for watching. Hit that like button and subscribe to the channel. You guys enjoy the rest of your day, and I will see you in the next one.